You've owned this since October. This is painful, right?
It's terrible. Yeah, it's just terrible. The stock's down 50% in the last year. They just can't get a break. The power business continues to slide, as you said. Cash flow continues to slide, and the sad part is the rest of the business is actually pretty good.
You have a buy on it,
yep.
So you thought something would happen. Obviously,
yeah.
What went wrong, and are you patient enough to wait for whatever it is that you thought was going to happen to finally happen?
Yeah, I'm patient. I mean, our target price is a 2-year target price, and I do think it can get back to the price we were just at a year ago. I do. I don't think the fundamentals are permanently impaired. Cyclically impaired for sure. I mean, power is going to be tough. It's going to be another tough year.
What's the problem there?
Combination of lots of things. I mean, people got really excited about U.S. gas,
right?
Turbines. And so you add a lot of capacity around the, really all the major competitors, and then demand.
The demand has dried up.
Yeah, demand's gone, and it's gone for another 2 years. I mean, it's not coming back tomorrow.
Should we be further concerned about the dividend, which they recently cut? But no, there's no more cuts.
No.
You're
You're
confident.
going to open cash flow targets again.
You're not worried at all.
No, I'm not worried about the dividend at all. I mean, look, if they can't execute it at a level of cash at $6 billion and above, then this management team probably needs to be replaced. I don't think we're going to get to that point.
The stock seems to trade on the power business, and you think it's bad for the next 2 years. So why isn't this dead money?
Well, because it's a $13 stock, right? I mean, you've got an asset value here, probably 2x to 2.5 times the current price. There used to be a thing called value investing that we all used to do once upon a time. Remember back before this momentum stuff, where you'd buy things like this? I think you just have to be able to look out 18 months or so, and you'll start to discount that turn in power. Power probably bottoms by the end of this year. So I don't think it gets worse in 2019 versus 18.
You point out that the history of industrial companies that have gone through transformations is pretty positive.
Yeah.
That they really do turn around.
Yeah.
So take me through some of that history.
Well,
which is part of your thesis, I'm sure.
It is the thesis. Otherwise, it's dead. But we have seen this at Honeywell. We saw it at Honeywell. In fact, I went through the misery in Honeywell in 2003 when I was recommending that stock for a while, and then we saw the turn there. We've seen this at ITT. We've seen it at Tyco. We've seen it at 6 or 7 key industrial names over the last 15 years. And normally, what investors get wrong is they mistake the cyclical decline for a secular decline, right? I mean, that's 90% of the time that's what they miss. And in this case, it looks like there's some secular challenges that gas power is going to be challenged for a while, but I don't think it's permanent. I don't think tomorrow we're going to wake up and say that we don't need electricity anymore.
There's an opportunity cost, though, to owning GE, obviously. I mean, you choose GE and you're not going to choose another industrial. Is this, in your coverage universe, are you the most bullish on GE, or is perhaps there another industrial that could offer some pretty decent returns? I mean, we heard from Honeywell, not exactly the same space today, but they raised their forecast for the 3rd time.
Yeah, well, luckily we have a buy on Honeywell and as well.
As well.
So, I mean, that's a stock. It's a stock. Luckily, we've gotten right over the years, but. I think that's a very fair point, but it's also to my point earlier about the death of value investing. I mean, it used to be that if you really want to make a lot of money, you bought Honeywell at $19 back when Dave Cote took the job, or you buy GE at $13 when Flannery's turning around. I mean, that's the reality. If you really want to make a lot of money in the S&P, you got to buy this stuff when it's really on its tail.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.
They are selling off some pieces of the company. Come on in, former NBC Universal Chair and CEO Bob Wright. Bob, you were right in the middle of NBC. You know it as well as anybody. You tell us, is it worth more broken up and sold off in parts or whole?
I think it's worth more whole, but maybe we can do some joint ventures, or maybe those things can happen where certain pieces of the business get sold off, but other pieces maybe add on in some type of partnerships. I don't think that makes any sense to look at liquidating the company. I think that's a fool's errand. He's got to stay. It's a tough, very tough time for Flannery, because I give you a fact that you probably haven't heard here. You got to think about the Gmail being able to disappear. Well, somebody must have done that to the balance sheet at GE in 2016 and 2017, because in 2016 they bought $21 billion of GE stock back at $30 a share, and in 17 they bought $2.6 billion at 20. Now, that's a terrible utilization of cash when you're sitting there and you have over $100 million maybe $110 billion of debt, and you've got another 25 or 30 of other issues which have to be dealt with. You've got money that could have been put into shore up the pension fund. You've got money that could have been shored up for that insurance issue. So Flannery inherited an incredible mess, if you want to look at it that way.
Yeah.
And I don't know where that board was at GE. And you question why a board would not pay attention to cash, and they spent all that money, and now he's sitting there and he's got cash issues. He's very up in front about it, and I'm saying, no wonder he has cash issues.
Yeah.
Look what the predecessors did within the 18 or 19 months before he was announced, and that's just stunning. So
Yes, it is.
he has to work through all of that, and he's trying his very best, and I think he's getting, people who recognize that he didn't give any more bad news. He did not say, oh, I found another bad problem. So he put everything on the table. That's
Okay.
the best he can do, and get those businesses up and running and get some cash flow.
I hear it. I do want to switch gears. I want you to update us on pancreatic cancer research. I know you lost your wife, Suzanne, to pancreatic cancer in 2016, and I believe you formed an institute to look at research into pancreatic cancer. Last time you were on the show, you reported to us that if you are diagnosed with pancreatic cancer, it's a death sentence, 95% of the time. Will you update us on that, please?
Well, this is why we need the HARPA. This is that healthcare. It's going to be Health Advanced Research Projects Agency. We need early detection would be the #1 thing to do. 85% of people are diagnosed in stage 4, and that's the death sentence. It's just a matter of
What are the
months.
early symptoms, Bob?
Well, they're generally stomach ailments, some serious stomach ailments, but the cancer could be in your pancreas for 12 years, 14 years before it overtakes the pancreas. But what also happens is it goes into the liver, generally speaking, and now you've got cancer in 2 organs, and you're not able to have surgery, and that's very, very tough. While the show's on, since you started the show at 9 o'clock, about 5 people have died from pancreatic cancer, 123 a day. And this year, since January 1st, 20,000 people have died in the United States now.
Okay.
And for the rest of the year, another 25,000 will die. So this is an emergency. This isn't a long time thought process.
Yeah.
And that HARPA tool I talked to you about, that is very well supported now by people inside of Health and Human Services. The Secretary's office is very well aware of this, and I'm hoping we're going to get the President's attention, continue to get his attention. It's all about innovation. But this is going to be bedside, getting something accomplished in a real short amount of time.
I got to run, but we thank you very much for your time.
I got to tell you one thing. Give me May 22nd, New York City. We're going to release a documentary that we produced on pancreatic cancer and HARPA. And on June 7th, down in Washington, Senator Thorne is the sponsor, and that'll be on January. I got
to go. You
June
know about
7th.
hard breaks,
Okay.
Bob. I'm sorry, I got to go. Bob Wright, thanks very much indeed. There'll be more
Thank you.
Varney after this.
Looking back, there was a time where I think Immelt had your full confidence. Looking back on it, do you think that was misplaced? Have you revised your overall viewpoint of how he led GE over his tenure? Have you looked at that and revisited that and think, wow, this wasn't what it appeared to be, or no?
Well, I keep looking at GE. I won't comment. Jack Welch is a very, very good friend of mine. Jeff's a friend of mine, and clearly there were mistakes made, and they made mistakes in long-term care. We made mistakes in long-term care. They weren't to the same degree, but that turned out to be a huge one. And I will read their 10K when it comes out. I'll read it very, very carefully. It'll probably take me all day to do it, but I'll do it. And no, insurance cost them a lot of money, and it's cost other people a lot of money. You can make big mistakes in insurance. And like I say, we made a...
Yeah, sorry.
Go ahead.
I'm just saying.